After being down for 46 days and $46,000, Bitcoin has now squeezed its way back to 90,000 bucks. That's 10 grand up from the low. So are we in the process of a relief rally, or is this the start of the next piece to the bull market? That's what I have for you in today's video. So make sure you hit the like button, subscribe to the channel if you're new. It is your home of macro cycle analysis. And of course, there is the Black Friday sale on at the moment. You can find a link to that in the top of the video description. Lifetime discount. So we're going to start off with the traditional finance and the stock markets and have a look at how things have been shaping up for this particular rally. Is there anything actually left in it for Bitcoin and altcoins, or are we all going to get absolutely squashed come a lower high for BTC? But on the traditional markets, we may see further follow through. So with the S&P 500, we're still on track with the 5-year cycle we've been tracking here on the channel for many, many months. Obviously going back to the April tariff crash low, you can see in the red line, that is what happened 5 years ago. The COVID crash low and replicated the fractal onto today's environment. You can see it right back here. And for some strange reason, humans have done basically the exact same thing as they did 5 years ago after a pretty significant scare to the markets. Back then COVID, and now is obviously the tariff crash. And even through the period from roughly September, peaks, troughs, and we saw the same thing for the stock market, peaks, and troughs, and it is now running back out just after a couple of days where it was lagging. You could see the 5-year cycle was running up and the S&P 500 was running down, but it seems like it is beginning to catch up again. We didn't have that final breakdown of the low that was going to change the structure, and we would have to have retired the model, and we've got this uptrend at the moment. So the upside for the S&P 500 is probably going to affect Bitcoin with higher prices, and that's why we may have this relief rally on our hands, along with many other signs that we've been tracking. The US dollar finally put in a local top that was at 100.3, and now we've seen, you guessed it, 3 bars down. But this is not the same as the 3-bar signal from significant turning points. Okay, so we've got a 3-day change in trend, which can lead to something further. It has a much more stronger chance of it happening, but when it happens from major turning points, as I've shown on the channel for quite some time now, over a year and a half, when we see it from major turning points, that's when we get major changes in trend. Cycle top for even the US dollar. Reversal bar here, day down, another day down with a lower high, lower low. Yes, it closed green, but it was a lower high, lower low. Another day down, another day down. We're seeing the signal at these tops, and although, which is going to be important now for Bitcoin because we're seeing it in reverse, although you could see 3 bars back up in a row, it wasn't enough to take out the top, and that led to the cycle top for the US dollar. That happened in September 2022. So now over 3 years ago, again, the 3-bar rule helped at that all-time high price. Even further relief for Bitcoin would be a cut in interest rates. We've seen this move from a pause at 4%. Now there is a higher chance there's going to be a cut. But like we saw even 10 days ago, the chances were a pause for interest rates. So the market really doesn't know what it wants to do at this stage because it's looking at 2 major economic data points here. One of them is your inflation rate, and this has continued to increase. You've got the inflation rate year over year was around 2.3, then 2.4, and then jumps to 2.7, then 2.9, and currently sitting at 3. We know the target rates are around 2%, and it hasn't gone back to that level yet. So if inflation continues to rise, well, it's going to be very difficult for the Fed to actually cut the rates, even though the market is anticipating a rate cut, because it seems like they believe that the Fed is putting a little more, may put some more weighting on the unemployment, which has also continued to tick higher, even though it's still in a historically low range, quote unquote, full employment range here, under roughly 4.5%, 5%. It is slowly creeping higher. And I don't think the market likes to look at this. I think the market wants the Fed to cut rates, but not too much. I know a lot of people want it to cut it a lot more, but it seems like something a little more fiscally responsible to do would be to cut it slightly and just see how the market responds, because you're in two very difficult situations here now in the US, and that is unemployment's continuing to rise. This has been the trend now since early 2023, so over 2.5 years. And typically, as this begins to rise, you don't normally see it turn back down. Look at the historic data here. As it begins to rise in each of these cases, it pretty much goes on to hit the recession level, or at least between 5 and 7%, which is a pretty difficult economic environment. Yet, you can also see the inflation rising here. So I think they are really treading on thin ice when it comes to the market. Either way, if we do get that cut, that could also help to this relief rally in the process as we speak here for BTC. Now, at the same time, we're also seeing metals continuing to have their next attempt at pressing to a fresh high, but it seems like it's being done on a weaker and weaker basis. You can see the darker shades here. This is the volume selling off on the red days. If you want your candles, here you go. Red days, so you're getting more selling off on those days as opposed to the buying that's happening. So you've got the white bars at the bottom, that's the volume, the amount of buying activity that's coming in, or the activity on the day. And if the day's up, well then it seems like there were more buyers than sellers. But when you look at that compared to the selling days, it is much, much less. So in the short term, yes, the price has been rising, but it hasn't been enough yet to comfortably take out those highs. Maybe this is the day here that it starts to get that rally higher. We'll have to wait and see, because it definitely needs some more closing prices above 54 US dollars an ounce for silver. And for gold, it's also on the decline when it comes to the volume. You can see the blue line in the background. That is the average volume for each of the days here. So that's the average 20 bar volume. So we're still seeing some interest in metals, but really it's not come back yet, even though we see that there are inflation fears. And we know when there are inflation fears that at least some of the market believes that they can run to metals to safeguard their assets, their cash. But we're also in an extended period here for Bitcoin, for gold. And when gold has a consolidation phase or even a bear phase, which turns into a bear phase, then Bitcoin typically goes on a major bear market as well. The white line is gold, the orange line is Bitcoin. The yellow rectangles are the regions of the Bitcoin bear market, which also coincide with gold either going sideways over that period of time, 12 or so months, or steadily declining. It doesn't go, this is gold, it doesn't go into a major bear market, but it has gone on some steady declines over that same period where Bitcoin has dropped 70 to 80% in each of the last 3 bear markets. So gold has got to this point now where it's gone on a huge run, big rally, $2,000 to $4,300, very significant run. It does eventually need some time to cool off. And if this is the cool off time similar to 2022, similar to 2018, similar to 2024, then it seems likely that Bitcoin may also cool off, but not in the way that we would hope, like we've seen throughout the bull market in 2024 and early 2025, where it was short-lived and then ran into new all-time highs. So a big one to keep watching now that could lead to this relief rally, of course, but in the long run, just be careful with what happens from that point. And I think that's another important reason when it comes to this particular relief rally is that at the moment, what I'm hearing is this sort of thing. A recovery is possible and the bulls are still there. They think we're going to run to new fresh highs. I think it's going to be important to see where this market comes into for the next high. This is Bitcoin. And do we get into this complacency mindset where it runs up and they say, we just got to cool off for this next move higher. It's going to be okay. You get the run higher and then the pullback and they think we're going to run into new fresh highs. Or does it actually hold up there, consolidate to break higher? So we've got to see what happens from that point. I'm still on the side that we've got a complacency bounce in mind, and it's going to get to a point that really shows, or at least gets some of the bears thinking that the bull market is back on, because essentially that's what needs to happen for a really solid complacency bounce. Now, for BTC, we've also seen the 3 bars down from the top, so a major signal there. 1, 2, 3, and that again has been the call for each of the all-time highs throughout this cycle, throughout last cycle in 2021 and 2021. Throughout the pump in 2019, we saw the signal again after a 400% move, 1, 2, 3, and that basically took the market down for about 6 months. And then again from the 2017 top, that took the market basically down roughly 70% straight from that signal, if this chart will eventually load. And obviously from that point, it ran into the bear market. Okay, so the 3 bars have shown up at major low points as well. And at the moment, Bitcoin is on a 3 bars to the upside. So let's take it back to this chart, go to the fresh time zone that we're in, and we've got 1, 2, 3 to the upside. So another reason why I think we're on for a relief rally, which doesn't change everything I've talked about over the last several months on the channel, where we've been looking at many of these signs that have been turning the market from their all-time highs down into a major correction. But there are signs that we've seen an oversold environment, and Bitcoin needs some time to come back from this oversold environment. The rest of this oversold environment is partly due to short squeezes. We saw this a couple of days ago, some of the news rising around a short squeeze for Bitcoin, and we see it on the long-short ratio here. We're out to 4.5% to the short sides. Long, short, the longs are at 47.75, and the shorts are at 52.25. That's 4.5% differential. And it seems like we've got a little more pain for the shorts to come before we can see any local top, so just an intermediate top there for Bitcoin, and then the price come back down. And I think that could look something like this, which is the fractal from 2021. Throw on the line chart. It's pretty much been following it again to a T, and we might have a little bit of a chance here to hit the 98s to 100K, some pullbacks, testing again. And in terms of the time frame, we are watching out towards late January and February for this move, which is why I think this relief rally has the potential to squeeze as many bears back into the game to think that it is still on. One of those first levels, I believe, is going to be around $100,000. If this market gets above $100,000, then I think it's going to make a lot of people believe that it's back on. That's 6 digits. The psychological level, yes, there's even some pretty significant support and resistance levels at the 100K level. You can see the area before we broke down, and then these lows as well. And then you go back to the 2024-25 tops. A lot of important support and resistance comes in and around that 100K, and of course a psychological number. But without consolidating above 108, then I think it's still on for a pretty significant relief rally, which can last quite some time, especially after no one wanted to buy Bitcoin from roughly 116 all the way down to $80,000. There was a very short period of time here, roughly a week, where it went from 99 to 107 and then collapsed from that point. So there really was not too many buyers from 116 down to $80,000. About a $36,000 range, no one was interested in. So I think we've got this squeeze coming back the other way. We've seen it with the liquidations, squeezing a lot of the shorts, and I don't think that's going to change yet. There's still a fair bit of shorts to be squeezed out. We still have enough exchange volume to make this thing worthwhile for people. It's still sitting around 56 billion. This is a 7-day daily exchange volume. So this is on your moving average here. And when we see a breakdown of the lows, roughly around 46 billion, that's when things get pretty quiet and the volatility dries up. You can see it happening around 2023. This is May, June, July, August, September, and then October. The volatility started to come back and we got those breakouts for Bitcoin. Same thing happened back in 2020. You had it in 2019, 2018. Just the exchange volume was very low compared to where it had come from in those bull market years. Seems like we did it again. You can see the little push higher with the lower highs on the exchange volume. Just like last cycle, you got extreme highs here in April and May, and then the all-time high came in October and November of that same year. Yet the exchange volume was much, much lower. So the interest had worn out, just like what we saw this time. So I think we've got the chance for the relief rally, but some of those signs need to flip in order for this relief rally to turn into the bull market again. So if this was going to be one of those quote unquote extended cycle theories, oh, I like that, bit of confetti there. It needs to break above $100 billion on the daily set, well, the 7-day moving average of the exchange volume. You can see we had the top in March 2024. What happened in March 2024? Well, we had this huge top here. The next one is December and January, and we had December and January. Here it is. November, December, January. That was extreme volume, and that's the January one right there. And since then, the volume has not been able to crack that $100 billion for any considerable amount of time besides the 1 day or 2 days there in October when we had the $20 billion of liquidations. So another reason for this relief rally is the fear and greed continues to climb higher. So we had a bit of a base forming here around 1011 on the fear and greed index, and now it's begun climbing higher. So this is the highest reading we've seen since the 12th of November, about 2 weeks ago, just over 2 weeks ago. And slowly, the fear is coming off with these slightly higher prices. The search volume also would need to flip above 50 on the 5-year review here. This is the search volume on Google with crypto and Bitcoin for the all-time high, which is what I have circled here on the chart. That was well under the November top, just like last cycle. So last cycle you had the tops coming in around above 75, so all-time high in April here, and then you had the dump in May right here at 100. So there's October 2021, November 2021's over here too. They were well under the 50, so you had again declining search volume, just like what we've seen this time. So relief rally rather than a bull market flipping into this extended bull market thing that people have been talking about, at least the perma bulls have, that would need to break at least 50 and then get anywhere close to the recent search volume there in 2024. So November 2024, where we saw that 100 to 108K top. That number, you're looking for Bitcoin search volume somewhere around 65. A bit of work there to do for a lot of that interest to come back. That would then coincide with fear and greed running up. That would also coincide with the daily exchange volume breaking out of that $100 billion. That would be the thing to flip the market there. So if we're seeing this relief rally occur, price need to break above 108. We break above 108, this in the search volume, obviously according to me and my own analysis, I need to see this flip. I need to see interest coming back in the sentiment. I need to see the traders coming back. That needs to break at least 50, ideally above this top here around 65. So that's 0.2. Then we would need to see extreme greed getting reached, or greed holding in greed a lot longer than in the fearful zone, which is what we've covered on prior videos as well. Looking here where the market drops into bear markets, it stays underneath greed for a considerable amount of time and doesn't really get into greed or extreme greed. So we need to see that flip. We need to see the exchange volume. We actually need to see some buying and selling activity, a lot more fresh money coming into the space. This whole idea about liquidity, need a flip on 100 billion. And we need to stop seeing so many people trying to go short all the time and then getting wrecked to the downside. Yes, we'll see it on the breakouts perhaps if we get closer to those tops, 108, 116, and then the shorts start to pile up because, well, that's what they like to do. They love to try and short fresh highs. That would be a good sign there to break the traders down, get the liquidity flowing again, and then break out to the upside with that volume to the long side, killing off all of the shorts. And we would also need to see the USDT dominance absolutely collapse. It has performed exactly like it did last cycle. We would need to see USDT dominance break under 5.3%. And if we combine the stablecoin dominance here, a rough looking number would have to go back under the previous swing low, and that number is at about 6.6%. So you can see this particular swing low right there. That's where the market came back after the breakout, tested the prior highs, and then took off, taken all of that liquidity out of Bitcoin and cryptos. We need to see this thing start to break down a little harder, because otherwise we're basically on track for what happened last cycle, where stablecoins go into an all-raging bull market like they did last time. So we're on that precipice right now at 8.88%. Beautiful number there for the combined stablecoins of 8.88, and in the term for USDT dominance, the number I'm looking at is 6.66. So just some nice easy numbers to remember there. Break a 6.66, then you're just looking for a much bigger stablecoin bull market. Now we've also seen the 3-bar signal for stablecoins. So significant top, the minor bounce that we've been looking for, which means a relief rally for BTC. This would be the minor correction for the stablecoin bull market. Inside, down, down, inside, down. So lower highs, lower lows, not broken. This could be on for that relief rally. So more of this pressure to the downside, closing and consolidating underneath 5.3. This is the box here, 5.1 to 5.3. Then I think you'd start to see a bit more of a flip to that extended cycle. However, I think this is the period that could get a lot of people offside and trying to pull any of those bear fence sitters all the way back to the bullish side, right at a time where you would see some support come in and then it break the other way. And in the case of Bitcoin, it'll look like the reverse. That's what the reverse looks like. Move higher, tests, and then starts to come back down. And the time frames that we're looking at, as I've mentioned, it was somewhere out to January, February period, because of many of the time frames that we've seen before using the 50 and the 200-day moving average. So the 200-day moving average market breaks down and then comes back to test it, takes about 90 days, 82 days, 88 days. Here's a 60, shorter term, but it's in a bull market. Here's a 100, it's in a bull market. Here's a 44 in a bull market here. So 44, 45, half of 90. We love 50%. That makes sense. And you could go back to each of the previous ones here, another 90 days, so on and so forth. So roughly 90 days from that breakdown point of the 200-day, starts from the third. That's when we got that bigger breakdown of 108. Another important reason for that period, the third and the fourth. Those are two big days there for the market to get back above. Where's that price? Around 111. And the 90 days from the third comes in, as I've said before, one of the most important days of your year. Mark it in your calendars. It is the 1st of February. That is my birthday. So lots to do in between now and then. Just the mere fact of holding this market, I think, holding it up for this period of time could lead many to think that it could be back on, right? Because if it's only a brief bounce and then a correction back below the previous lows, well, you're sort of going back with the same sentiment that we've seen through this entire 46 days to the downside, $46,000 correction, and it wouldn't be anything too different. I think the market, I think Bitcoin has to do enough to fool the majority of people most of the time, and typically that takes a fair amount of time. In this case, I think it's going to take that sort of 1 to 3 months, enough time for people to forget about all the damage that has been done already, this 46K move to the downside, as I said, over that 46 days, enough time for that to wear off in the psyche before it goes on that next spin. So let's see how this thing progresses over the next 1 to 3 months, and whether we get close enough to this 200-day moving average like it has done in the past, where it rallies up, tests the level, and then starts to fade out again. That's going to be the big one, I think, over this next, I've said it many times, that 1 to 3 months. Okay, for the altcoins, they're also on this period of a relief rally, bouncing off the 50%. This is your total 3 ES, so excluding stablecoins. And of course, because it's total 3, it also excludes Bitcoin and ETH. It's come back down to $550 billion, 50% level at $570 billion, and attempting to rally again on our 1, 2, 3 days to the upside. But again, this isn't from a very significant turning point. Therefore, although it's a 3-day turn to the upside, I think this could just be same sort of period that I've been talking about with Bitcoin. A break above 700 billion is going to put it in a better, stronger position. You can see the 50% there from the low to the high. Nice round number as well. And then we'll be looking for 750, which are the previous tops and bottoms. There you go, right through the middle. So that's for the altcoin market. The others dominance, so this is altcoins excluding all the top 10, so those major ones there, Solana's, XRPs. It's been holding up okay, but it really hasn't done too much from this point. So it still needs to cross the major thresholds here, at least 8.4 above the previous tops, and ideally above 10%. So a lot of work to do to put it into a strong position to get that altcoin pump. And I know a lot of people are still waiting on this altcoin season. You know, the Bitcoin cycle top usually doesn't come in unless there is an altcoin season. But this has been on a multi-year bear market. Altcoins have been on a multi-year bear market. And without this changing a macro trend, the macro trend has been down for years, then it's pretty unlikely that you're going to see any sort of bull market, altcoin season bull market like you've seen in the past, because you're on a macro downtrend. You need something to change this macro downtrend. Now for the major altcoins, Solana's also had a very similar signal here, 3 days to the upside, inside, up, 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 up. So you've got a few extra days to the upside. It could be enough again for a short-term rally. What you'd be looking out for is the 50% lows to the highs. Any sort of breaks above 190 gives it some sort of chance. A lot of work to do there, 150, then 190, and then the white line here, which is your 210 prior tops. And XRP has been holding above $2, but slightly weaker here with only 2 days higher, 2 higher highs, higher lows, and then it's formed into an inside and a down day. So for the sake of XRP, lows to the highs, it needs to now do any closing prices above 250, some consolidation above there, and you can see all these previous lows around the 275 mark, previous top there. That would pretty much get it into a stronger position. But apart from that, it's still on its downtrend here from the all-time high that happened in July. So the big question, I think, is there enough time left in the macro 18-year US real estate and economic cycle for Bitcoin cryptos to have their relief rally, for them to have their pullbacks into a final bear market low sometime around mid-2026, maybe out to around October, giving that 12 months, and then for them to go in another rally? Or do we see the peak of the 18-year cycle come in first? As we know, the housing prices are pretty well around their peak there for the US. Some areas still going up, some going down, which is then flattening the rise for the national average, which is what this is being measured off. We've been talking about this now for years on the channel, riding it all the way up in the face of the wall of worry, in the face of the perma bears and the constant fear and crashes and so on. And I think we're getting towards this top now. But that doesn't mean that the stock markets end. We're still seeing further upside there for the stock markets, mostly being led by AI. I mean, everyone knows about that by now, but that doesn't mean that just because everyone knows about it, it's time for it to end. The bubble can go longer than most anticipate, especially when they're in a strong position as well. The only time things get easier are around the lows of the market. So we've got a bit of time to go here. I wouldn't be stressing and be getting yourself prepared for the peak, prepared for a correction. Like, subscribe, the Black Friday sale is on. If you want to learn how we're navigating our portfolios through these volatile times into the peaks and then into the corrections, TIA Pro lifetime discount is on this week. I'll see you guys back here for the next video. Until then, take care. Peace out.